2022-23. It's my pleasure to welcome you all today to this knowledgeful bank audit seminar session. First of all, I would like to extend my special welcome to our guest, Shiv Prasad sir, who will be speaking next to me. I hope that today inspires ideas and discussions around the ways that we can make our bank audit assignment to be discharged with high volume of efficiency. Without taking much time, I would like to give a brief introduction about today's speaker, Shri Annavarapu Shiv Prasad sir. Sir qualified chartered accountant in the year 2003 and is in practice since then. He secured All India 7th rank at CMA Inter and prestigious 4th rank at CMA final level. While doing this practice, he served as lead consultant on retainer basis to State of Andhra Pradesh and commercial taxes, state tax, government of Andhra Pradesh from October 2018 to October 2019. Sir practiced as partner Umamaestro & Co. company from 2006 to 2018. Presently, he is managing partner of SGRP Associates LLP. Presently, Sir was nominated as a member of GST Grievance Redressal Committee to State of Andhra Pradesh. Most important thing to be noted here and to be listened carefully by you is, Sir performed central statutory audit of public sector banks, Oriental Bank of Commerce and Andhra Bank previously. Sir was selected as the faculty for GST under faculty identification program conducted by Institute of Chartered Accountants of India. Sir presented more than 150 seminars on GST at several forums like ICAI, Chamber of Commerce, CAI, and various other trade associations. With this brief introduction, I would like to hand over the proceedings to the today's speaker, Shiv Prasad sir. Sir, stage is yours. Please continue, sir.
Yeah. Welcome all, and I thank Sikasa and in particularly Bharadwaj for this opportunity to interact with the aspiring chartered accountants to discuss with aspiring chartered accountants. Students is always special because they are the future. You are the future. Okay, so today we have about I couldn't see the number, some 16 members are there. So I want to make it as interactive as possible. How many of you are listening it on phone? How many of you are listening it on laptop? Can you put a quick chat for me to? Yeah, put it in a chat. How many of you are listening over phone? Phone, right? So yeah. So just keep answering my questions and you can also interact. But I prefer the mode of chat window over the voice because it is easy for us to manage. Okay. And how many of you have already been part of bank audit? And in second year or third years of articleship, you might have already had the experience of attending the bank audit. How many are totally new? I just want only news. Yeah. Okay. Okay, right. So there are quite a few. Good. Yeah. And I prefer you to switch on your video if it is possible for you. It will make the session more interactive. That's it. So coming to the subject proper, we are here to discuss about the bank audit, more particularly statutory branch audit. It is well known by the abbreviation SBA, statutory branch audit. What is the ultimate goal of any audit report, or what is the goal of any audit? The goal of audit is to, or the culminating point of any audit is to issue a report. Okay. If you go to a branch, to whom you are issuing the report? Is it to the shareholder of the bank, or is it to the President of India? To whom you are issuing? To whom we will issue our audit report? Any idea?
Members, to the members of the company.
Yeah, put it in a chart. Put it in a chart because we cannot in a chart. I can interact with more people than on voice. Okay, yeah. To the members. Any other views, guys? Any other views? Okay, no major views. So keep your phones active, keep your fingers active on the phone. I'll be asking you many questions, both technical and non-technical. Okay, to the president. Fine. To the RBI. Okay. In case of government bank, it is all government bank. No private bank issues any branch audit. Okay, there is no business of branch audit in case of private banks. In case of private banks, it is all centralized. Yeah, to the stakeholders, to the shareholders. Unfortunately, none of them are correct. Okay. In case of an SBA, that is a statutory branch audit, we are issuing our report to the central auditor. So bank had got a tier 1, tier 2 kind of a system. So where each branch is audited by a SBA, statutory branch auditor, who in turn reports to the central auditor. They called SCA, that is statutory central auditor. So the duty of the central auditor is to consolidate, to understand each of the branch audit as done by the branch auditor. And in case he had any doubt, he will dig deep. Otherwise, he will go ahead with its own finding. So therefore, we must know to whom we are serving. That is very important. We must know our pavilion. We must know our gallery. Okay. So to whom we are issuing the report? Point 1 is central statutory auditor or statutory central auditor, as anyway is okay. So therefore, we have to keep this in mind, that our report is not a final report, but our report will be consumed by the central auditor in issuing his report. Okay. So therefore, it is very important for us to see that the information that we want to communicate to be put in a final bank's balance sheet should be clear. Okay. Now, what are the most important deliverables in a bank audit? If you go to the bank audit, normally it will be there in the second week and third week of April. First week, they will be allotting and all. So therefore, in these 2 weeks of time, when we go to the bank audit and we conduct that, what are our deliverables? What is the end result of our audit? Obviously report, but what are those reports? Do you know the name of them? What do we issue? Put it in a chat box. At least those who are on laptop and desktop. Okay. Even phone also you can manage. Copy is saying LFAR. Okay. And you can put a direct, not a direct message. You can put it on auditor's report. Okay. Any more things? What the auditor at the branch level issue is not a single report, but rather it comprises of multiple reports and certificates. There will be almost 50 to 60 documents that your principal has to sign. Of course, nowadays we are signing means digital signature. Whatever it is, the concept is signing or attesting. So there will be certain reports, there will be certain certificates. Okay. And there will be certain opinion kind of a report. Okay. So there will be certain informative reports, there will be certain opinion kind of reports, there will be certain certificates where we attest for the accuracy part of that. So therefore, the first thing you have to understand is what are all the deliverables. You will get a closing circular by the bank. Every bank issues a closing circular. What is the closing circular? Is a literature where you will know each and everything that is to be done in a bank audit. Okay, how many reports are to be delivered, how many certificates are to be delivered, what is the purpose of each of the report. Everything will be very clearly written. It will be a 100-page or 150-page kind of a document. So you try to obtain it from your principal and go through it. Then you will get the real benefit out of your going to the bank audit. And you will also secure certain marks in your examination directly, because practical questions will be there anyway. Okay. Anyway, coming in the order of priority, just like how the auditor, the final auditor, the central auditor issues an opinion to the shareholders, even the branch auditor will also issue an independent auditor's report. What are the essays, the standards on auditing that guide on issuance of independent auditor's report? SA 700, good. Okay, if it is a qualified modified, then 705. Good. So therefore, just have a reference to that standard. Okay. Just have a reference to that standard. If you go through that standard, then you will see the real application. Okay. See, in normal, what happens is, in normal chartered accountant's life, only few listed companies and only few entities will give us an opportunity to explore the whole of the subject. Bank audit is one such avenue. Okay, so don't ever miss that. Very, very important. Very important to make you visualize how the world is going to be, how the auditing practices are going to be. Okay, so first one is independent auditor's report. It could be qualified, it could be adverse. Typically, in case of a bank, what happens is there is one acronym which is very famous, one abbreviation, that is MOC, Memorandum of Changes. By the time you step into the bank balance sheet is already prepared at the head office level. The branches have already prepared their balance sheet. The branches have sent it to the head office, and the head office has already consolidated. Okay. So therefore, the consolidation will not wait for us. What we can do is, if you want any rectification entries to be passed, only those rectification entries we suggest. Okay. So it is like by exception. The balance sheet, the profit and loss account, or the other annexures and the disclosures are all done already. Okay. So therefore, the way to communicate to the central auditor is by MOC, Memorandum of Changes. Got it? And in the Memorandum of Changes, there are again the Memorandum of Changes that affects the financials. I mean the balance sheet head at the total of the balance sheet. And certain MOCs, they work on informative or disclosure part of that. For example, there is an MOC affecting the classification or provisioning. Okay. Normally, in case of banks, the provisioning entry will not be made at the branch level. The provisioning entries will be made. The provisioning for NPA, of course, I elaborate it a little later. The provisioning for NPA will be made at the head office level. Okay. So therefore, it need not be passed at the profit and loss and the balance sheet kind of a thing. However, even that change will also be communicated by a memorandum of change, and that the name is not a rectification entry. Okay, it could be accounting, it could be non-accounting. The debit and credit aspect could be there, could not be there. The change could be in a report. So therefore, it was given a neutral name, memorandum of changes. So whatever the change that you want to communicate on the set of financials or set of reports that are already prepared, you will issue through an MOC. Then why you are signing all the balance sheet and profit and loss account which were prepared even before you going to the bank? It is only for authenticity. These are the sets on which I subjected the audit. So I am stamping them, signing them, or affixing my digital signature in a digital way. And my reservations, my observations, my suggested changes, I am communicating with through a separate document by name MOC. So therefore, your audit report shall be read along with the memorandum of changes that you may suggest. Okay, I'm not saying your principal, because in my understanding, you are the ones who will do the audit. That's it. You must assume that responsibility. Otherwise, you can't learn. You should feel that you are the signing person, and you should conclude the audit as if you are the signing person. Then what are the additions that your principal may bring in, he will bring in. That's it. Okay, that is his job. He will do it anyway. So I discussed it so far, the independent audit report that has to be given, and the second one is the memorandum of changes. Apart from that, there are certain statutory reports that are to be given. Statutory audit reports. Okay, somebody has posted what we give in a bank is LFAR, long form audit report. Okay. See, we have this style even with our MOC, Minister of Companies, ROC. Also, there is a report by name CARO. So what happens is, in independent auditor's report, we give only the reservations or qualifications. I mean, the negative observations. So if everything is good, we will not write anything in the audit report. But LFR is not like that. LFR is a positive confirmation. Okay, there are two types of confirmations. One is positive confirmation. Second is no negative confirmation. Okay. So therefore, every question that was asked in the LFR, whether it is positive or negative, whether you find a positive or whether you find such exceptions or not, you have to inevitably give your answer. Similar to Caro. Whereas in the case of an independent audit report, you need not give anything. If you are okay with that, you say that everything is true and fair. So that is a principal difference when you understand between IAR, independent audit report, and LFR, long form audit report. So our LFR is more like a questionnaire, and it is intended to get the information from the auditor. So it was a very lengthy one, and recently in the last year, it underwent a major change. Now, auditor has to give even the sample that he had chosen. Earlier, there is no such a requirement. Earlier, the requirement is we take a sample and we conduct the audit. We will not say to the world that this is the sample that I have picked up. But now the LFR form is changed. Very, very important change. Please make a note. Okay. Now, whatever the sample that you have chosen, even that sample account numbers, whatever the account numbers that you have picked up for sample should also be communicated. Somebody said something. Yeah, if it is a inadvertent crosstalk, please mute. So therefore, our responsibility is now multifold. Now I raise a question, whether you will pick up a single sample, a one sample for every case, or you will pick up a sample for every case independently. Like for credit appraisal means how the loan was appraised that it is a good loan to be given. So for credit appraisal, I take some sample. For documentation, I take some sample. For MPNPA determination, I'll take some sample. Is it a better way, or I'll take 5 or 10 accounts as my sample and I will perform all the tests on that particular sample? Which you feel is a better way? Answers, please. Who had got the fastest fingers? First one, Vasavi. Now I have to go back to my question. What is first one and what is second one? Okay. So context-based sampling, multiple samples from single source. Of course, source is always simple. It is always good to draw multiple samples, because if you take very recently sanctioned loans and check for NPA determination, that is a useless sample. And if you take a very old loan and if you verify for the credit appraisal, how the loan was sanctioned, the loan was sanctioned 4 years back and it was already subjected to 3 or 4 audits. So therefore, if we are verifying on credit appraisal, your sampling should be on a recent accounts. Okay. Like similarly, in LFR, there are certain questions. Whether in case of transfer of the borrower account, whether the transfer process was done properly or not. In case of restructured accounts, so that is the context. In case of upgraded accounts, that is the context. In case of newly sanctioned accounts, that is the context. So that if is our context, your sample should always bear an inference or bear some rationale to the context. Okay. Otherwise, you cannot apply some sort of a mechanical sampling and say that pinky ponky, I have selected some 10 samples and this is my sample set. No professional bias. Of course, leave the bias part. There is no professional itself in that. Okay. So therefore, we should apply our mind before we select the sample. Okay. So now I'll give one exercise. Of course, no marks, no reward, no punishment. Beautiful exercise. Okay. So you take down the LFR and list down all the different contexts that the LFR is speaking about. Okay. So it speaks about pre-sanction. Pre-sanction is a phase where we go through the application and decide whether the loan is a good one to take or not. So that is called credit appraisal. Means whether it is credit worthy or not, whether the borrower is credit worthy or not, whether the loan is good to be given or not. And then there is a phase of sanctioning, dispersal, post-sanction unit visit, and post-sanction completion. And then there is a third phase where the account is running, the conduct of the account. So therefore, we must, if you take the total jotting or the dump, as the bankers call it, if you take the total dump of the Excel file, we have to break it down into multiple pieces and then have a sample in a relevant context. So that makes our sampling more useful, productive, professional. Okay. Now, shall you have to document the basis of sampling? I'm asking a question. On what basis you have selected your sample? Shall we have to document that? Yes. Okay. What is the relevant auditing standard? Good. Beautiful. Okay. And before you go to SA 3530, shall you have to make the risk assessment or not? Shall we have to make the risk assessment or not? If it is a workshop kind of a thing, I could have demonstrated the whole. Even now I can do that, but then it will be very difficult and the time will not permit me to go through all of that. I can even do the risk assessment in front of you so that you will also know how to really do a risk assessment. Yeah. First of all, many people wonder, is it really possible? It is all theoretical. It is not theoretical. Okay. So how many of you have statistics as one of the papers? Just let us deviate for a while. How many of you have got statistics as one of your papers in CA Foundation, or I don't know the present name. I think the name changes for every 2 years. Yeah, in CPT. Okay, that is one beautiful name. I don't know what is a full form of CPT, but whatever. Okay, I think some foundational course. Right, good. Now, you have got a normal distribution, right? You have got a normal distribution. What is that normal distribution saying? If some data points are distributed normally, from the mean to one standard deviation left side, one standard deviation right side, how much of data will be there? How much of data will be there? I'm asking mu, mean plus one standard deviation on the left, one standard deviation on the right. So mu plus or minus 1 sigma. How much of total data will fall in that interval as per normal distribution curve? I could have seen your faces had it been a physical seminar. Okay, now everybody's thumbnail is appearing the same. 3, what is 3? I couldn't make anything out of that. Anyway, I'll tell the answer. Around 68% of the data will fall within one standard deviation range. Now you understand the bell curve. You recollect that? The bell curve, there will be a mean in the center. Okay. So if you are given a very big Excel file of advances, how can you pick up a sample? I'm just giving you one hint. Yeah, 0 plus or minus 1 standard deviation. So you calculate mean, you calculate standard deviation. I'll just do one demonstration. Yeah, now I've got multiple accounts. Okay, I have got 38,358 accounts. 38,000. You are able to see the screen, right? So I have got 38,000. Now, where is my, what do you call that? My outstanding amount. I'll go to my outstanding amount. Let us say this is my balance. Fine. Okay. Now, out of this, I have to convert, I have to find the extremely large or extremely small accounts. because an extremely small account and an extremely large account is definitely important. It is an outlier. Okay, so how can I do that? First, I'm doing one thing. I'm applying filters. See, it is not an Excel class. First of all, let me be very clear on that. I'm only telling the concept. It is not a workshop. Had it been workshop, I will also ask you to do, and then you will also be doing it. So I'm saying does not equal 0. So I have applied the filter. Now I have got all the items which are in that range. Okay. Now how can I convert it into a Z score? Because something is very small, something is very big. What I do is I will take the mean of this. So mean is coming to, our average is coming to, just give me a second. So my average is 11,588. And what is my standard deviation? STDEV. This is my standard deviation. So now what I'm doing is, what is the Z formula? X bar minus mu by sigma. So balance minus mu divided by sigma. So I'm freezing this so that if I move up or down, it won't change. So why we are doing this, I'll explain. Okay. Now I got the Z scores. I got the Z scores. I'll apply the filter. By the way, what is the auditing standard on sampling? Oh, I already asked, sorry. Okay, you can visit that also. So it will explain everything clearly. So I'm applying the filter and I'm selecting wherever my Z is greater than 3 or wherever my Z is greater than 2.75. That's it. So what is my sample? How many I have got? Only 10 out of what? Put it in the chat box. What is my total advances file? I already shown it now, 38,359. So from out of 38,000, I have calculated and I have picked up those accounts which are extremely far off the mean. See, a loan of 1 crore, is it a big loan or a small loan? Can somebody answer? 1 crore, is it a big loan or small loan? Don't be lazy, please answer. Oh, sorry, there were some messages, I think. Big. How can you say big? See, there is a bank and all the loans that are given are 90% of the loan are 1 crore. It is an MSME bank or a LCD bank, large corporate branch. So everything is of 1 crore. So out of all 1 crores, 1 crore is not a big number. Okay. Whereas in a bank, most of the accounts, the average is around 60,000 or let us say most of them are agricultural loans. Okay. So most of them are averaging around 5 lakhs. In such a branch, if there is some 2 crore account, then it is a big account. Okay. So you know the deviation from the norm. Very, very important sentence. You know the deviation from the norm. If you know the norm, then you see the deviation. If you are missing on the norm, so what is normal if you're missing, then you cannot define what is deviation. What is deviation? What is clearly apart from the normal. So therefore, you must define what is normal first. Okay. Now, what I did, is it a good way or a bad way? Your opinion. I applied Z score. So what it says is how far this account is from the average of that bucket of the total branch. Is it a good way or a bad way? Good way. Sharwani says good way. Yeah, but I am not satisfied. What I feel is if I make them into smaller buckets like agricultural loans, gold loans, housing loans, then apply Z score within each bucket, how it will be? Will it bring more granular stuff or not? What is your opinion? Sharwani. Okay, so that is where we have got our auditing standard. What it says is classify the data, stratify the data. Okay, what is the difference between classification and stratification? Anybody? I think you're tuned to listen a monologuous lecture. Okay, where only the lecturer will speak. So I repeat my question. What is the difference between classifying the data and stratifying the data? Anybody? If anybody gives a proper answer, Bharadwaj will give you some treat, chocolate or something like that. I can also give, but I have to give virtually. Sure, sir. Okay. The surety is about the chocolate, not about the answer. Answer you have to give. Anybody? By the way, what is your average age? I'm surprised when these many people are dull and calm. Classification means splitting of data. Okay, but then what is stratification? Stratification is also splitting. See, I give you the answer. Classification is categorical division. Stratification is quantitative division. Okay. So classification is categorical. So if you are separating them into multiple classes like agricultural loans by an attribute, by a quality, if you are differentiating, then we call it as classifications. Okay. So agricultural loans, housing loans, some other industrial loans, term loans, overdraft loans, if you are separating them, then what we call it as classification. Okay. Whereas stratification is there is no difference between them on any attribute. All of them are agricultural loans. So they form into one class, but then we are making into strata. What is the strata? 0 to 1 lakh, 1 lakh to 10 lakh, 10 lakh to 1 crore. So we can, I also explain it this way to my students. Classification is a horizontal division of data. Stratification is a vertical division of the data. So when you take a whole big data of the branch, you say them into horizontally, means on the width, on the breadth of the data, all agricultural loans, you go left side, all some other industrial loans, you go to the right side. So then what I'm doing is horizontally, I'm making it. Now within each horizon, within each silo, within each cell, within each pillar, I'm cutting it, chopping it vertically. So small, medium, big. Now what happens if you classify and then stratify and then do this Z score? Then what happens is maybe all of these loans in my sample may be industrial loans because they are very big and you are taking average across all the loans, 38,000, only all five are from industrial loans. Is it a good way to do? No. So therefore, you must first classify, you must then stratify, then you must know within each class, from each strata, you must be able to pick up a sample. Then it is a proper representative sampling. Okay, it is not a pinky ponky sampling. You should not do. Okay, that anybody can do, even a non-professional can do. So therefore, whatever you learn in your theory book, apply. That is what for we are all. That is what for SICASA is. That is what for your bank audit is. That is what for our articleship is. So make the best use of that. Don't waste your time. Okay, take a test data. Take a test data, do your hands-on. So therefore, instead of running the Z score, first of all, what I have to do is I must break this 38,000 into maybe 3 into 3. 3 classes, 3 stratas. 3 classes, 3 stratas. So how many sub buckets I have got? 3 into 3, 9. From each 9, I may run a Z score, I may run a min max, I may run a random sampling. Okay, I can do anyway. Shall I show you the random sampling ones? So anybody interested in copying the formula? It's a very simple formula. You all know that x minus mu by sigma means the data set minus average divided by standard deviation. So that gives a score. If that score is above 2.75, it is very far off. 3 means it's too far. Okay, 3 will come almost 99% of the data will be covered by 3. Anything beyond 3 is like our creatine level or some blood sugar level. Anything above 3 is very, very high. That is a thumb rule. That is what normal distribution is. So therefore, you must use all of your subjects. Probability is not a different subject. Statistics is not a different subject. Auditing is not a different subject. Excel is not a different subject. We are here to apply everything together and deliver our product. Okay. So good, right? So far, any questions until now?
Sorry to interrupt. I'm getting many messages to my personal phone number regarding the redemonstration of the Z score. People are asking.
Yeah, I'll do that. I'll do that.
Please, sir.
Sure. No issue. So first of all, just like in our recipes that we do at home, we require 2 ingredients. Okay, like salt, pepper on one side, and then mashed ginger on the other side. Like you require 2 parameters. One is average. And the other, so what is the formula for average? Simple. Here you can see average of C15 to C38,000. So therefore, average means you are taking the average of the whole data. Okay. Without classification, with classification, that is your choice. Then the second one is standard deviation. What is the formula for standard deviation? STDEV. That is in Excel. The standard deviation is STDEV. Standard deviation. So therefore, we have calculated mean, we have calculated standard deviation. Now my formula is like this. Of course, x bar minus, sorry, x minus mu whole divided by sigma. So that is what I did. So you can see the formula. Maybe I'll zoom it a bit. So the formula goes like this. So C571 is the current row. So current row divided by J1 means mean divided by K means standard deviation. So x minus mu by sigma. That is how you are converting it.
Current row minus average by standard deviation.
That's it. Okay. And if you do that, anything above 2 is a little bigger. Anything above 2.7 is dangerously bigger. Anything beyond 3 is an outlier.
Right.
Okay, that is a property of the bell curve, normal distribution that we have learned our. So you go revise your statistics books, okay, or ask your demand your SICASA chairman to have another session on that.
Sure, sir. Thank you. Sure, definitely.
Okay, so we must apply everything. Otherwise, it is not just to read it in the books. Okay, it's a professional course. It's not a anyway. I'll not go into that. Now I'll apply my another way to do the sampling. Okay. Anyway, my today's session is not fully on this. Let me first select a proper data set for this. applied filters. Just I'm preparing one small example for you where it is greater than 0. Now I'll show you some fun. Normally I will use my Excel on Windows, not on Mac, but today I'm using it on Mac. That is why I'm a bit slow. Okay. Anyway, I ask you a question. There are certain numbers, there are certain names, like example. How many are there? 20 are there. Fine. Now I want you to pick up. Any 5 out of them. Not by your selection, but by selection by Excel. How can you do that? So Excel must pick some 5 sample out of this 20. Random. No logic, nothing. How can you do that? Anybody? Anybody? Any answers? Gopi is saying RAND. Good, very good. So we can use RAND. So how can you use RAND? RAND is an old function. Now we have got RAND between also. It's a very good function. I'll discuss both. So I'm first using RAND. So what RAND does is automatically it will give a number between 0 to 1. So it has given 0.87. Okay. It will always give between 0 to 1. I already said that. Okay. So if I copy them, so we have got the selection. Clear? Now these are all random numbers. Every random number will be between, I set the range 0 to 1. Now I am just improving the formula a little bit. If that rand number is, let us say, greater than 0.75, then selected, otherwise don't select. So that is my formula. So how many are selected? 1, 2, 3, 4, 5. Now shall we run the show again? How do we run the show again? Go to formulas. There will be a calculate button now, or F9 is a keyboard shortcut. So now the selection is changing. In some audits, we have even video recorded this process. If it is a high risk. Everything is important. Okay. I have not applied any professional bias, no prejudice, no privilege. So therefore, what I am doing is Excel is generating a random number. And if that random number is greater than 0.75, we are saying it has selected. If it is less than 0.75, we are saying it has not selected or nothing. So therefore, Excel is selecting 1, 2, 3, 4, 5 at random on its own. So I'm running it for 2-3 times. See, at times there is more than 25% sample. Let it be. So you run it. You stop it somewhere. Take a screenshot. That's it. Take a screenshot and that's your sample. So now go to your book. What is this sampling called? Random sampling. Okay. So when everything is of same class, when everything is of same strata, when everything is having a same attribute, when two things are equally likely, there is no way to differentiate that one is better than the other, then there is no choice. You have to go for randomization. So randomization is your last option, not your first option. So far clear? Any doubts, any questions? The participant numbers are fluctuating quite a bit. Okay. Now I give another. So do you want to copy this formula? I'll just zoom. If rand is greater than 0.75, that 0.75 you can change as per your choice. It is selected, otherwise not selected. Why this is more important in bank audit? This is nothing special to bank audit in this, in fact. But bank audit, there will be huge data. If you do go to an agricultural advances kind of a branch, there will be thousands of agricultural advances. So what you pick up, and moreover, you have to give the sample in your LFR. Okay. So tomorrow, if somebody asks how you picked up your sample, then you have to answer. Now I am giving you one tough question. Those 39 people appearing on participants, I'm giving you one question. So I have got some 26,109. Okay. I'm giving some 26,109 line items are there. I want you to pick up a random sample. Okay. I want you to pick up a random. I first write down my requirements. Okay. Then we will see how you work. So what sample you want? Random sample. Okay. Of the random sample, you want to cover. Yeah. So it's a simple question. I don't want to put my hand into that. Let Excel has to do, because I should not get involved. Tomorrow somebody should not say, you know that borrower, therefore you have removed him from the sampling. No. I want to do it through systematic, through programmed. Okay. Now I want to cover 60% of the value, but I don't want to cover more than 20% of the size. So number wise, I should not exceed 20. Value wise, I should not come less than 60. No, that is a question before you. Practical. How to do? Any ideas? Please answer. Don't overload me with chocolates. See, I'm applying the same concept. So what I'm doing is, I'm applying a random number. The size is good enough, right? Random number. But random number will not give any weightage to the item. Okay. So this 2,000 and this 20,000 and some 40 lakhs, everything is one and the same to the random number. So therefore, I want to give more weightage to bigger items, lower weightage to smaller items. Therefore, I am multiplying with the same weight divided by, I am taking the sum here. Okay, I'll come to that. So here I am putting the sum of all items. Now what happened is, I have taken a random number. I've taken a random number first, and then I have given a weight. What is the weight? How big is this number on a total volume? So the total volume is 57 crore 32 lakh 63,000. This is 2,000, very, very small. So therefore, it is 6. C2 divided by C1 is very small number. Anyway, if my random sample is greater than 0.6, I will select, otherwise I will not select. So therefore I am not selecting this. Clear? Now I'll copy the same formula throughout. So some are selected, some are not selected. So therefore I want to get two things. Count. What is a count? Count is equal to count of this or sum of this. Just give me a moment. I'll explain again. No problem. Don't worry. So now I got only one selection. I don't know where it is. Anyway, there is one selection. Okay, we can filter them. Or I'll take a smaller example that will make it easy, because you are not able to see the whole data. That is a problem, right? I'll take some random numbers. So this is my item number 1. Okay. Now, from out of these things, how many are there on a screen? 18 are there. So out of 18, you must select certain things on random. But what is the rule? I said you should not exceed more than 20% of size, and you should not be not covering 60%. You must at least cover 60%. So that is our target. So what I'm doing is I'm generating a random number first, and then I'm multiplying with that as a weight divided by the sum. Okay, so these are the random numbers, but these are weighted random numbers. So I'm giving the name weighted random number. What is a weight? Its size is its weight. Now you can observe the minimum of that is 0.00030379, and the maximum is, of course, it will change again, 0.047. So therefore, I am putting a rule that if it is greater than 0.02, select, otherwise don't select. I'll share the Excel file also, don't worry. So therefore, now how many are selected? What is the count? 11 are selected. 11 are selected out of 18. So that means you are covering 50%. And what is a value covered? The value covered is look at this sample. It is covering 61% of count, and value wise it is covering 70%. Is it a good sample? No, because we are covering more on count. What to do? Just run it again. Look at this. We are covering only is it a good sample? We are covering 60% of the count and only 67% of the volume. That is very bad. We must see that we cover as low as possible. Yeah, Pragati, I'll come to you. We'll cover as low as possible and we will cover as big as possible on the value. Okay. So therefore, what we can do, we have to change the way we select the our choice. So therefore, I am making it as 3 now. So I'm reducing the count. So I'm reducing my count to 22%, but the value covered is 32% only. Okay. So I will just run the loop again and again. 28, 40, 52. 22, 40. I'll stop it somewhere where I felt that it is a good sample. Maybe the data is all the data is of equal size. That is one reason why we couldn't get it. But anyway, this is a maximum that we can get. Okay. So therefore, we are covering only 33% of the size and the value wise, we are covering 41%. So what I did, I just repeat it again. First, these are my data. These are my data. 18 advances are there. So I have taken them. And what I have taken is I have given a random number. So this is my random number, but I have converted it into a weight. So therefore, that divided by the total. So therefore, 973 is how much percentage of 10,000? Maybe 1% or so. Okay. So therefore, every random number is weighed against that weight. Okay. Now, based on that, I have given certain percentage. If it is greater than 3%, then select me for the sample. So therefore, I will keep a watch on how many of the count I am selecting and how many of the value I am selecting. So it is your Pareto analysis. What is Pareto analysis? You should be covering 80% of the volume, but you should not be covering more than 20% of the count. Okay. If you take a real data, then it is possible. But here it is a very simple 18 random numbers. So therefore, it is the difference is not coming down much. But if you take a real data, it will happen. Okay. So this is how I have given you a Z-based, normal distribution based sampling. I have given you a basic random sampling. I have given you a Pareto wise random sampling where you have a clear watch on the count and the value. Okay. So this way you can have a neutral identification. Okay. And there is yet another way, that is risk-based, risk-assessed, risk-based sampling. Okay, risk-based weightage we can give. Here I have taken the weightage based on what? Its size. But if I want to take the risk weightage based on something else, what is that something else? I'll just explain. After that, I'll take the questions. So I am saying my risks are based on how many times the account is overdue. How many times the checks are bounced? How many TOLs are sanctioned? Okay, let us say if it is overdue for 3 days. So I'll give a scoring. What is my scoring? If it is for, let us say, less than 10 days in a year, I'll give 1 as my risk score. But if it is between 10 to let us say 40 days overdue, I will give a score of 2. If it is 60 to 180, I'll give a scoring of 3. Or if it is above 180 days, if it is on overdue basis, maybe at the year end it is normal, but then if during the year for 180 days it is overdue, then I will give a highest risk. So therefore, on this base, I'll count the risk for this account. So this account is overdue for less than 10 days, so 1. This account is overdue for 60 to 180 days, therefore 3. This is for 10 to 40 days, therefore 2. So therefore, I'll get the risk weights. 3, 2, 1. Similarly, how many check bounces are there? So I'll go like if there are less than 3 check bounces, I'll give it as 1. If there are less than 5, I'll give it as 2. If there are less than 15, I'll give it as 3. If it is above 15, I'll give it as 4. So therefore, how many check bounces are there? Okay, let us say there is no overdue at any point of time, but there are 3 check bounces or 15 check bounces. So it is 3. Here, there are overdues are there, but then check bounces are only 5, or it is coupled with number of check bounces are also very high. So therefore, here also it is getting 4. Like that, whether it is a concurrent auditor commented account. Whether the concurrent auditor had commented it for irregularities on interest or service or near about to the quarter end regularization, that also I will have certain metrics. So this is my firm's policy. Okay, this is my firm's policy. So therefore, in Excel, what I do is against the account number, I will give a scorecard. My scorecard is fixed. So therefore, I'll ask my student, you take this sample or you take these 100 or 200. How many overdues are there? How many check bounces are there? How many concurrent auditor commented accounts are there? How many head office commented points are there? Based on that, we will give some certain score. So therefore, it is 1, 2, 2, 1. I'm just putting it random now. So therefore, this is my total risk. So I'm considering all the risks. Of course, you must see whether the risks are additive in nature or not. Okay, all risks are not additive in nature. See, check bounce and overdue has some connection. So that risk and this risk you can add. Okay, check bounce and then earthquake. There are unconnected risks. You should not add, you should not do any mathematical operation on unconnected risks. There should be some sort of an homogeneity, or at least they should belong to certain class. So therefore, now what is your sample? You tell me. This is 10, very highest risk. This you should definitely cover. Okay, and then after that, we will be covering this. After that, you will be covering this, or maybe if it is like 8, I'll be covering this. But then to do all of this, you must require a lot of data. Okay, you should put some real groundwork, and the bank manager should also be willing to give a lot of data. Okay, so you understand how to do the risk assessment? This is not risk assessment of a bank or a company kind of a thing, risk assessment of the audit subjects. Okay, so I started with pure no mind random sampling to most qualitative granular, where we most discriminatory sampling called risk weighted sampling. Okay, so therefore for each account you will have certain scorecard. Okay, so how to decide which score to be given? There are no hard and fast rules. It is a professional judgment of the auditor, your professional judgment, your way to look at the things. And you should also see here, you are for overdue, you are giving this kind of a punishment above 184. Check bounces also above 15.4. There should be some sort of a balance. Then only you can add those risks. So you must check the additive principles of risks. Okay. So I tell you, auditing is very, very interesting subject. Very interesting. Okay. If you have a real data, if you have a chance to do the real audit, you will never leave the auditing. Okay. Because it is like playing chess. It's a high mind game, object oriented, and you will catch hold of from out of 1 lakh. You will definitely pick up those 5 to 10 where there is a real problem. That is your success. Okay, anyway, we discussed enough on how to pick up our sample. So, of course, this is not a class, but then because your students, I'm just repeating, go by context-based sampling. One sample fits all. That maxi-sized gowns will not work in auditing. So therefore, go with context-based sampling. Okay, read your data. Okay, don't go for overall, classify them. In the class also, if there is a huge quantitative spread, stratify them. If there is a huge difference in the risk pattern, then try to give some sort of a scores, be quantitative, be objective, give some sort of scores, and then based on certain criteria, you come up with the ranking. Okay. You can also do Pareto analysis, which I showed. Okay. So you can give a random number and then you make that random number into a weighted random number. Based on that, you see that you run the iterations again and again Excel until your objective, your required sample is obtained, like this much of size and this much of volume. Got it? So therefore, we have seen all of them: classification, stratification, randomization, risk weighted, context-based sampling, all of that stuff. Okay. So therefore, first of all, you must know where from the risk is emanating. What are the risk drivers? See, how can you say the account is not doing well? If there is a bulk credits happening, okay, if there is a bulk credit happening, which is unconnected to the business, then we can say it as a high risk. If there are a number of, most of the time it is under overdue status, only before the quarter closure, it is turning into green. Then it is an indication of a risk. Okay, so we'll have an objective approach for that and we'll go about that. Okay, anyway, we crossed 1 hour. So therefore, let me take a break here for 2 minutes and let me go leave this Excel part and then go into see some LFAR kind of stuff. What are the reporting requirements? Before that, I have one, how many hand raises are there? Pragati or somebody had raised her hand. So what, the doubt is resolved or you are in no mode to ask? Anyway, if you have any questions, you please, you can ask here itself, you can chat, or you can direct message Mr. Bharadwaj. Okay, otherwise, Bharadwaj, 2 minutes, 3 minutes of break. Yeah, so we will resume after 5 minutes.
Okay, sir.
And we will continue with the LFAR and the reporting requirements kind of stuff. Right, we'll be back.
Thank you.
5 minutes ఇచ్చారా?
Yeah,
5
5:42.
minutes హాస్టల్కి వెళ్ళిపోవచ్చు. ఛార్జింగ్ లేదు, అయ్యో అసలు వాళ్ళకి ఉన్న సంగతే గుర్తులేదు.
తొందరగా వెళ్ళండి, హాస్టల్ కి టైం సరిపోదు.
Mute just 1 second. Mute just. సార్ స్టార్ట్ చేద్దాం.
Yeah. Now, as I said, our deliverable at the end of the audit report is the independent audit report, the signed financials, that is profit and loss, balance sheet, cash flow, and other disclosures, coupled with memorandum of changes, if any, suggested by the auditor, and then the long form audit report. Okay. So much of the branch auditors' workload is towards handling the LFR, long form audit report. Okay. So one beautiful question. How many of you have gone through the LFR? Put yes or no. No is also answer. Rajendra, you said me. Yes or no? Have you gone through or not? Yeah, good. Sharwani says no. No. Okay. So therefore, it is very important for us to go through the LFR first. Without going through LFR, we cannot handle the, or we cannot have a sense of direction of the audit in the branch audit. Just give me a moment. Yeah. So this is our LFR, revised LFR for 2020. Now, what it says is, it is into paragraph and subparagraph kind of a setting. So first paragraph is on cash, and there are around 5 to 6 questions. And then it will move to bank balances. There are certain questions on bank balances. And then investments, maybe not relevant at the branch level. And advances, this is the most important part in any bank audit. So on advances, again, credit appraisal is one section, dispersal is one section, documentation is one section, monitoring is another section. So this is a lengthy LFR which had got almost 150 or 120 line items, like, okay, 170 line items. So we will cover the significant ones in this, and we will also discuss our audit approach. Okay. So the first chapter is on cash. Normally, the bank will maintain cash? Yes or no? Yeah, exactly. So even a bank has to have a cash, because it is collecting cash every day, and it is also paying the customers the cash, and it will always maintain certain minimum cash to meet the immediate surge or fall in the withdrawal or deposit or whatever. So therefore, it will maintain its cash. There are certain laid procedures in which the cash has to be maintained. So you have to observe during the course of audit, and you also see how the cash book is maintained. And these are the questions. Does the system ensure that the cash is maintained in effective joint custody of 2 or more officers? There are certain golden rules in internal control. And the golden rules are like this: maker, checker. Okay. So one who does the transaction, one who executes the transaction should not approve. The one who does it and the one who approves should be different. Okay, so the maker should be separate, checker should be separate. Similarly, SOD, segregation of duties. So the duties should be segregated between the people. One person should not have control over the entire chain or life cycle of any workflow. The third one is delegation of powers. So for a smaller transaction, you give it to a smaller authority. For a higher transaction, you give it to a higher authority. Okay, it's a vertical division again, the concept that I have explained. And rotation of duties, ROD. So we should segregate, we should rotate, we should have a delegation of powers, we should have a maker checker concept, and we should have minimum 2 people to vet and say something is correct. Because if only one person is doing it, he may commit a fraud. If 2 commit a fraud, they have to collide. And as we see in movies, every collusion and every perpetration of fraud will break out someday, because there will be some disturbances and somebody will leak it out anyway. Anyway, that is the point. The cash has to be maintained in joint custody of 2 or more officials. Then, so how do we know whether this is done or not? First, observation. That is what our auditing evidence. What is the standard number? Auditing standard number. I keep asking that question. Good. I think Rajendra is very good with auditing standards. Good, Vasavi. So Rajendra and Vasavi are giving very good answers on the auditing standards. Good. So evidence, how do we collect evidence? First thing is observation. Second thing is inspection. Third thing is walkthrough. So therefore, you first observe whether on the day you visited the branch is a joint custody or not. That is not sufficient. We have to have a backtrack. So that is process walkthrough. Go through the registers and all. Okay. See that every register, every transaction is assigned by minimum 2 officers. Okay, that's it. Then have the cash at the branch and ATM being checked at periodical intervals as per the procedures laid by the branch. So therefore, this is it a point check or a period check? Whether this question is pertaining to the period on which we conduct the audit or for the whole period that is under the audit. It is for the whole period under the audit. So you are not there in the branch. You are not there in the branch throughout the year. You are only going it after the year is over, that too for 4 or 5 days. But you have to give a comment on the whole year. So therefore, you have to verify the records. Okay, we have to verify the records when the cash and the ATM cash is verified, who had verified, what are their findings. There will be a manual register or a digitized register. You have to go through that. You have to have a jotting of that. Then, does the branch generally maintain or carry cash balance which varies significantly from the limits fixed by the controlling authority? Very, very important. Okay, so every branch will have certain limits fixed by the controlling authority based on the volume of the branch, based on the nearness to the cash chest, based on certain other considerations. The head office will say that this branch should not maintain more than 40 lakhs of cash, more than 60 lakhs of cash, like that. So therefore, you have to report how many times the bank had held cash beyond that limit. So you have to have a daily cash balancing report, and you must see how many days the cash balance exceeded the limit, and you must also give the answer, reasons. Then, does the figure in the balance in a branch book in respect of cash tally with the amount of balances with respect to ATM? So every ATM will have a log, how much of cash balance it had got. And each branch will be normally having 2 or 3 ATMs depending on the size of the branch. Okay, so therefore, it is like cash at third party. Of course, ATM also belongs to the banker. So therefore, we have to verify the cash as per the ATM log versus the general cash book. Then every cash balance that is held, the average cash balance that is held by the branch should be insured against theft, against loss during the transit. So therefore, you must see whether there is an insurance policy taken by the branch. Most of the time nowadays, the insurance policies are taken by the head office. Therefore, we need not bother about that at the branch level. So these appear to be mostly specific questions, but then the more technical questions are to come. Then at times what happens is this branch will have a balance with another branch or another bank. Let us say we are going for the audit of SBI. SBI is holding cash balance with some other HDFC. So when there is any surplus cash, they keep it with other banker to earn certain interest, and they will also collect the money as and when required. Okay. So therefore, if there are any cash held at the other branches, what we are seeing is balance confirmation certificate, very, very important document. Okay. So this is a document we have to collect and document it. Okay. Observation and reconciliation statements. Then cash transactions that remain unresponded. What is this remaining unresponded? Sent by us, but not accepted or acknowledged by the other person. Okay. Sent by him, but not yet received by us. So these are unreconciling items. So this list you have to provide. Okay. See, if you read the LFR, you will get to know the audit approach. Okay. So therefore, you will have to be thorough with the LFR. Next, other credit and debit entries originated in the statement unresponded for more than 15 days. So where from you have to get this data? See, LFR is very dangerous because it is not sufficient if you say that there are no mistakes. Whether mistake or not is not what is asked. How many times or what are all the transactions that remain unresponded for more than 15 days during the year? You have to prepare an annexure and give it in the form of an LFR. Most of the time, the bank will prepare and the auditor will accept that. Okay. Could be very risky at times. Okay. In normal course of life, it may be good, but sometimes there could be fraud. At a later point of time, if there is some cash embezzlement or some fraud happening in a branch, the auditor will also be held responsible for the professional negligence. So therefore, you have to be very, very careful. Okay. Anyway, all of these points are very simple. Then money at call and short notice, mostly it will not be relevant for the branch audit. It will be relevant for some treasury branches kind of stuff. So therefore, I'm skipping it off. Investments is also the same, not relevant for your branch audit level. Now, advances. This is a 5th chapter, most important, crucial chapter of the LFR. Of that, there is a subchapter again, credit appraisal. So what is credit appraisal? Credit appraisal is a process that is undertaken prior to the sanctioning. So it is a pre-sanction process. It is a pre-sanction process of deciding whether or not to give a loan to a particular borrower. Whether or not giving to a particular borrower is safe or otherwise. Okay. So, see, in your opinion, had the branch generally complied? The question is a little easy. Okay. So, generally complied means in 1 or 2 cases, it may not be complied, but generally it is complying. It is safe. But then the next questions are very dangerous. You go through them. Okay. So, therefore, what we are seeing is regarding loan application, preparation of the proposal, renewal, enhancement. So, you have to take a sample from each of the context. That is what I said. Context of a sample. Every sample has got a context. One sample will not fit all. So for renewals, you must take 2 or 3 out of renewals. For fresh loans, you must take 2 or 3. For loans that are not given also, you have to take a sample. Normally, auditors tend to miss this. Okay. So therefore, sir, we have not given the loan. Anyway, I want to see why you have not given the loan. Okay. Then, have you come across cases of quick mortality in accounts where the facility become non-performing asset within a period of 12 months from the date of first sanction? So there is a technical word by name quick mortality. That means it died soon. From the day it was sanctioned, within 12 days, it had become NPA. Anyway, I'm not covering the rules of determination of NPA. Okay, maybe time constraint, but that is very, very important. That is also very, very important. Okay, anyway, we will discuss. Or I'll try to cover it at least to some extent while I go through the determination of that. But what I want to give is the audit perspective of how to deal with the bank audit. And what is our final reporting? How to have an audit approach from practically from the data and how do we manage that? That is what I just want to deliver it to you today. Next, have you come across the cases of quick mortality? That means a loan becoming an NPA very quickly. That means within 12 months from the date of sanction. Okay, it is not a general question. Details of such account shall be provided in the following manner. Okay. So you have to give the exact cases of quick mortality. How do? You take everything into Excel, sanction date minus or NPA date minus sanction date. If the difference is less than 12 months, then put it in that. Okay. Now it is very dangerous in another way. There are quick mortality accounts, but you have not selected any sample out of that. Is it a correct approach? So you knew that there is a quick mortality case, then why you missed it in your sample? No, sir, I applied the random sampling, sir. I applied a new function. I learned a new function in the webinar. So therefore I applied that. That won't sell. Okay. I said you must know which tool to apply where. Yeah. Whether in borrower accounts, the applicable interest rate is correctly fed into the system. Very important. This is called master check. Now, every bank is having a software, the CBS core banking systems. So all NPA determination, everything is happening through the system, but the system will work on GIGO basis. What is GIGO? Garbage in, garbage out. Okay. If you put garbage, it will give garbage. So if your master data is wrong, automatically the NPA computation, the interest determination, the interest table, everything goes for a toss. So therefore, master check, that means checking the master parameters that are fed into the CBS is very, very important. Of course, if it is a concurrent audit branch, you have a small backing. In a sense, the same is already covered by the concurrent auditor. You can go through the reports, and if you had reported anything, then we must definitely cover it in our sample. Okay, so this is master check. Some ACLI, H or the Finacle commands. So you use them, go there into the Finacle, take a printout of the master and verify the same with the sanction terms. So how the loan is sanctioned. So sometimes what happens is the loan is sanctioned for 48 monthly installments. Okay, in a system it is fed as 48 quarterly installments. It will never become an NPA. Because as per the system, it is a quarterly installment that it is looking for. So therefore, the system will go in that direction. Okay. Similarly, the rate of interest is fixed rate of interest, but it is marked as floating rate of interest in the CBS core banking. Okay. It is an equated monthly plus installment account, but it is marked as equated interest plus installment. Okay. So these sort of deviations in the master data will render the whole system go haywire. Okay. So therefore, this is very important. You have to definitely take some sample for master data verification. Okay. And you must definitely cover the areas of the concurrent audit report if that is a concurrent audit branch. Then whether the interest rate is reviewed periodically as per the guidelines to the floating rate, MCLR and EBLR. So these are the way in which the bank calculates the interest. Okay, the marginal credit lending rate and the external benchmark lending rate. So based on these rates, what happens is just like how the prices keep changing, the petrol price changes. Similarly, the bank interest will also keep changing as per the notification of RBI or as per the other criteria. Anyway, how to calculate that is a little beyond the scope of today's session. But then the head office will issue a circular in this regard. So you go through the head office circulars for interest rate change during the year under audit, and you wherever there is a floating rate of interest loan, just go there, see whether the actual rate of interest is changed on that. These are the risk points. Have you come across any cases of frequent renewal or rollover? Okay, the installment falls due on December, but then he applies for a rollover and it was postponed to next quarter. So if that rolling over is happening, then it is an indication that the account is not healthy internally, intrinsically, and he is managing it somehow. So there we have to be careful. Whether correct and valid credit rating of the credit facilities from RBI or accredited credit rating agencies have been fed into the system. So how many of you have heard capital adequacy, Basel 1, Basel 2, Basel 3 norms? I believe it is there in your CA final. Capital adequacy. Have you? Yeah, there is a rule in a bank that normally bank does its business with borrowed funds. So what is the business of a bank? It will accept deposit and in turn it will give it as a loan. Okay. Now, can a bank accept any amount of deposit? Can a bank accept 1 lakh crores as deposit and lend 1 lakh crores? No. Because if something goes wrong, what is the capital of the bank? What is the core fund that the banker had brought in? If the banker had not brought in any core fund, that means if his own share capital is not sufficient, then he cannot go to such an extent of business. So this is called capital adequacy. That means every bank shall have a minimum capital to do this much of a business, this much of borrowing and lending. In order to calculate the capital adequacy, one of the important points in the formula is credit rating. So every loan that the banker gives, if it is beyond 5 crores of rupees, it should be rated by an external empaneled credit agency like CRISIL, CARE. So those people will give the credit rating like BB, B+, those will be the rating indices. So you must check whether the rating, every rating is valid only for 1 year and it can be a grace period of 3 months, 15 months. That's it. After that, the credit rating is not valid. If the credit rating is not valid, then the calculation of capital adequacy at the head office goes for toss. And we are responsible for that. Okay. So therefore, and that is very, very important point of assessing the credit risk also. If the credit risk is weak, if that loan should not be given. Okay. CIBIL is not a credit rating, but CIBIL is also a credit related index. Okay. So far we have seen credit appraisal. That means whether or not to give a loan. Now we have decided to give a loan. Then whether the sanctioning is good or not. So there are certain care, caution, measures and checks to be taken while sanctioning. Okay. So in cases examined by you, have you come across the instances of credit facility having been sanctioned beyond the delegated authority of a bank? So every branch manager will have a limit. So for manager, scale 3 officer, scale 4 officer, scale 5 and all, there will be certain limits to AGM, DGM, CM, etc. So we must first see what is the scale of the branch. So is it a scale 3 headed branch or a scale 4 headed branch? And based on that, what is his maximum lending capacity? And he cannot borrow or he cannot lend more than that. If that is the case, he must take the approval, either pre-sanction approval or post-sanction ratification with the head office or the next regulatory office. I'm sorry. Whether advances have been disbursed without complying with the terms and conditions of the sanction. This is called dispersal audit, or also called a legal audit, which will be done internally by the bank staff. Okay. Or a normal function of credit concurrent auditors normally. So what it is every sanction limit will have a sanction terms and conditions. We also call them as covenants. So before disbursing the loan amount, sanctioned loan amount, loan sanction does not mean he can take away the cash immediately. He has to comply with the terms and conditions of the sanction. Very, very important. So sometimes what it says is he must bring this much of capital. Sometimes sanction letter says that only if he brings 20%, banker has to give 80%. So for every crore, he must bring 20 lakhs, then only the banker can give 80 lakhs. So the proportionate dispersal. So sometimes the sanction letter says amount to be disbursed directly to the vendor's account, should not be given directly to the borrower. Let us say somebody had come and asked for a loan to purchase machinery. The banker will not give fund directly to that factory owner. It will give directly to the machinery supplier, so that the funds are applied only for the purpose for which the loan is sanctioned. Okay. So where from you will get all these rules? After IRAC norms, income recognition and asset classification norms, the next important document you have to see is the sanction letter. Your audit starts with the sanction letter. So the sanction letter will have everything, whether it is a floating rate of interest, fixed rate of interest, whether interest has to be paid along with EMI or interest separate, installment separate. Okay, everything will be there in the sanction letter. Whether the charge is a first charge or a second charge. All of these details will be written in a sanction letter, and we have to see that the sanction letter terms and conditions are all satisfied. Okay, so you must take a sample of the freshly sanctioned accounts and see whether the dispersal is happening as per the sanction or not. Okay, then did the bank provide loans to companies for buyback of shares? Company can buyback of shares should not be funded by banks. You all know that. So if any such case of cases, you have to catch hold of that. Then documentation. What is this documentation? This documentation is called the strengthening of the security. So therefore, the banker, if he sanctioned a loan, it must get the security properly documented on the bank name. Otherwise, the banker will be at risk. Okay. So therefore, you have to identify any deficiencies in the documentation. This documentation audit is very, very important in LFR. You must cover at least a good amount of sample, and you have to say all the recently sanctioned loans should be verified for documentation. Okay. And you also have to learn certain technical stuff on that. Sometimes it is called first charge. Sometimes it is called second charge. What is the difference between first charge and second charge? Anybody? Anybody? Answer, please. Whether first charge and primary security are one and the same? No. Then what is the difference? What is the difference between first charge and primary security? See, first charge, second charge will say, if there are multiple bankers, which banker will get a first right? Now let us say there is a property. On the property, two banks are giving loan on the same property as security. Let us say Punjab National Bank and State Bank of India. Both of them are getting, both of them are sanctioning loan, taking the same property as a security. Now, whoever is having the first charge, he will get the first right to monetize that. Okay. When the State Bank, let us say State Bank is having first charge. The first charge fellow, the State Bank, when he takes his money, and if any security is left, then it will go to the next one, the Punjab National Bank. Okay. There is another way that is called pari passu. What is pari passu charge? Both the parties will get proportionate share based on their sanction limits. So you must see the sanction term and you must see how the charge is created, and both should be in sync. Both should be in sync. Okay. And primary security, collateral security are different things. Primary security is the same asset for which the loan is given. Let us say if I am giving loan to purchase plant and machinery, then plant and machinery will become my primary security. Okay. So the end use of the fund, whether it is land, building or property, that will become the primary security. In addition to the primary security, banks will insist on some additional security that is called collateral security. Okay. So attack again, the way of charge creation, there are multiple ways. There is a registered mortgage, there is an equitable mortgage. A registered mortgage is where the banker and the borrower will register the mortgage by affixing the stamps and all, and it is properly registered in the name of a bank. But then registering is a very costly affair because they have to pay some 3% as etc. as stamp charge. To save on that, they will go for equitable mortgage, where the borrower will give the title deeds to the banker, but the charge is not registered with the revenue department. it is risky. Why? Because somebody later he may say that my documents are lost, and he may put a police case that I have lost my documents, and he can get a duplicate document and sell the property also. So wherever there is an equitable mortgage, what the bankers will do is MOD, Memorandum of Deposit of Title Deeds. Okay. What they do is they will get a paper saying that I have taken a loan. In order to secure this loan, I have offered this property, but I have offered it only under equitable mortgage without registration. Therefore, I am giving my original documents willfully with an intention to create a security. So that will become MOD, Memorandum of Deposit of Title Deeds. Okay. And this MOD can be registered with a slight fee. Then there are multiple agencies like SIRC. So there is a SIRC registration where we will register it with some central repository of information, and we will register it stating that these documents are deposited to the banker with a purpose. Okay, so all of these are documentation issues. Unless you have the technical knowledge of these meanings and all, you cannot even catch hold of the mistake that is, or that might have crept in the bank. Okay, and you have to be very careful when the branch is not under concurrent audit. The branch is already under concurrent audit. At least the concurrent auditor is having certain watch on the transactions on a periodical basis. Our risk is a little reduced. Okay, but if it is a smaller bank where there is no concurrent audit, then you are the first auditor on that. There, your amount time spent on documentation, sanctioning, credit appraisal, you have to be very, very careful. Okay, and after documentation, so there are steps. First, we decided whether or not to give a loan. Then we have issued the loan. Then we have created the security. Now we are coming to running of the loan. So in the running of a loan, what we do? We will review, monitor, supervise. RMS. Okay, so this is the verification of the conduct of that. So therefore, it is not that bank will issue a loan and then forget. So there is a periodical process. They will collect monthly stock statements. They will calculate drawing power on a monthly basis. They will collect provisional financial statements. They will have a periodical inspection to the bank, and they will also have a monitoring system on the credit ledger or the account statement. So where from the debits are coming, where from the credits are coming from, where from the debits are going to, that also they monitor. So they monitor at account level on the system. They monitor it physically. They also get a document, and they also verify the stock statements and all, and they will create the drawing power. Okay, the calculation of the drawing power, the formula for that requires a good session again. Okay. Anyway, take the help of your seniors also. So this review, monitoring, and supervision is the stage that comes after the loan was disbursed, after the securities are created. So unless there is a proper review or a monitoring system, even a good loan can turn into a bad loan. So we have to be very careful on that. See how many detailed questions are there on that, and you have to give all of them here. So all of them, what I have said, all of them are there in the review, monitoring, and supervision mechanism. Now comes the IRAC norms. What are these IRAC norms? Income recognition and asset classification. Okay. Normally, the income recognition we do on accrual basis. That means whether or not we received the money, if the receivability or collectability are there, that means you are sure that you will get this, you are sure that you can recover it from that person, but you have not collected. Can you book your income on a due basis, on a receivable basis? Can we book an income? Normally, in case of general industries or general businesses, they book their income on accrual basis, but banks are not supposed to book it like that. They are governed by IRAC norms, income recognition and asset classification norms. In the asset classification norm, the most important word we have to be very careful is due and overdue. Okay. So as per the sanction letter, whenever an interest or installment is payable, that is called due date. The moment interest or installments are not paid on the due date, the next day it becomes overdue. And if it is an overdue for certain period, that is 90 days, it will be called as a non-performing asset. And again, on the non-performing asset, there are multiple stages. So first one is substandard. From substandard, it will be there in the substandard stages for 1 year, and then doubtful for 1 year, doubtful for 2 years, D1, D2, D3 we call. After 2 years, after 3 years, it will be called doubtful for 3 years. Okay. So this income, this is asset classification based on the performance of the account. Okay. So the rules will differ from term loan, agriculture loan, crop loan, infrastructure loan. There are various rules for each of the category of the loans. So we'll take one by one. We'll take term loan first. So when a term loan, what is a term loan? First of all, term loan is for a fixed period of term, and there is an installment. Interest and installment, the principal will be repaid on certain date, on certain term. That is why the name term loan. The opposite of the term loan is demand loan. That means in the demand loan, the borrower will pay only the interest. He need not pay principal, but you have to pay the principal as and when it is demanded or called back. So that is called a demand loan. So in case of term loan, the rule is simple. Whether principal or interest have become overdue. If the interest or principal have become overdue for a period of 90 days, it is called an NPA. And then the subclassification of that into substandard, D1, D2, D3, it is based on time frame. 1 year under substandard, 1 year under D1, 2 more years under D2, after that D3. But when it comes to cash credit or demand loans, there is no principal payment. There is only interest payment. Like if you take a business loan, working capital loan, you will never repay the principal. You will only pay the interest. Once in a year, it will be renewed. But if we are not having enough of drawing power or enough of backing, the loan will be recalled by the bank. That is why it is called demand loan. That means the banker can demand it back at any point of time. Further, the determination of overdue is having multiple rules. First one is the credits in the account should be minimum equal to the interest debited. That means, let us say I have taken a loan of 1 crore, okay, at a 12% rate of interest. So therefore, every I have to pay roughly 1,20,000 per, let us say, year. So in a quarter, if I have to pay an interest amount, at least I must deposit a credit that is equal to the interest deposit, interest that has to be paid. I think all of this is already there in your IPCC syllabus. Anyway, this you can make out. The audit angle is what is very important. Okay. Or else you refer to the IRAC norms, potential guidelines on IRAC norms from RBI side. It is all very clear and very self-explanatory. So the rules of OCC, open cash credit, and the demand loans are very different from term loan. So there should be activity, there should be credits, and the credits should be minimum equal to the interest amount, and the drawing power should have been reset, and the loan should be renewed not later than 6 months of time from the date of determination of our balance sheet. So therefore, if the loan is given long back and it was never renewed, he is serving interest, even then it will become an NPA. Okay, because it is not subjected to review. Every demand loan shall be mandatorily reviewed. Okay, and if it is not reviewed over the review time, if the review date is crossed and 6 months had gone, it will become an NPA automatically. Similarly, the rules for infrastructure project are different. Infrastructure project, it will go by, in addition to these rules, there are certain additional rules for them, like DOCO, date of commercial operations. Let us say you are building up a very big hotel, restaurant. Okay, so you will submit a project and say that I will construct this hotel and the hotel will come into running by April 1st. If you are not able to achieve the date of commercial operations as given by you at the time of applying for loan and as written in a sanction letter, the DCO, DOCO or DCCO, whatever they call both ways, if that is breached, it will become an NPA. Okay. Once it becomes an NPA, the asset classification will come into play, S1, S2. And based on that asset classification, there is a provisioning now. So for every standard asset, they have to maintain a minimal provision 0.25% and all. And for substandard asset, they have to maintain a higher provision and it will go on. Anyway, for this, where from you will draw a sample, simple, all NPA accounts, they have to be verified for all of this. And wherever, even prior to NPA, now banks have come up with a concept called PNPA. P means potential NPA. They are not NPAs, but they have a tendency to become an NPA. So they are called potential NPAs. So we have to verify even the potential NPAs. Because a banker might have done some sort of a window dressing, might have brought some credits from his friends, relatives, or some other bank accounts in the same branch, and see that this account is not slipping into NPA. So you have to give your sample on what we have to taken, and you have to see how these things are done. Okay, of course, bank audit is a ocean. Okay, there are restructurings, there are sacrifice computations, there is Basel norm. Okay, anyway, this is a student seminar, and within the given time, I'm only giving a brief how you can assist your principal properly and how you can apply the concepts that you have learned in book actually in your usage. Okay, beyond that, if there are any other questions, how to do that and all kind of stuff, you can refer to the material, institute's material and all. You can, I don't know if there is a facility, you can also write to Sikasa and all. Okay, and if anybody reaches out to me, I will also do my bit to answer the queries, but I cannot promise that I will write back a full detailed explanation and all, because time constraint and all. So it's a very good opportunity, guys. Don't waste your time. Enjoy your bank audit. Okay, don't, of course, you will have the fun of moving around places. That is there. You have to enjoy that way also. Professionally also, it is a very good opportunity to learn. Number of concepts are there, and the more you focus, the more you get to learn. Okay, so all the very best for the upcoming season. Don't let the summer, the hot temperatures of summer will not be a binding block. You go ahead, do your work, and enjoy the professional knowledge that you get in the process. Okay. Please explain stressed asset. Yeah, a stressed asset is one which show the tendencies of a non-performing asset. Okay, or had become an NPA. Okay, normally certain banks have got a separate branches for stressed asset management, SAM branch they call, stressed asset management branch. So if something had fallen into NPA, then the bank will come to certain sort of a resolution process where how you are going to come out of this NPA. Okay, will you bring in any more equity, or whether some more lending is required for you, or whether some hiving of certain current assets, reducing something and then downsizing the loan is required, or if you are not able to do anything, sell away the security and close the loan, or go for what you call that OTS, one-time settlement. So therefore, there are multiple steps of stressed asset recovery and resolution of stressed asset recovery. Okay, now they are ARCs, asset restructuring companies. Okay, what they do is, if any account goes bad, if any account becomes NPA, they purchase this NPA account and they pay the banker, and they will take the burden of collecting from him or selling it off the property to somebody else. So they are specialized into the business of handling NPAs. They are called ARCs, asset restructuring companies. Okay, and of course there is debt syndication. The whole process goes on. Okay, it's a very big journey. It's a very big journey. So two simple things I tell: never feel shy to say I don't know. Okay, Never ever feel shy to say, I don't know. I don't know is a power. Okay. So whenever you are in doubt, reach out to your seniors, ask for help and explain. So, see, you say this, I understood, this I have not understood, I require your help. That is how you learn. Okay. Second, experiment, explore. Okay. Sometimes when we raise a question, we may cut a fool out of ourselves. Don't worry. Unless you are ready to become a fool, you will not become intelligent one today. Okay. So therefore, never be hesitant to ask for help. Reach out to the people who can help you. Don't be shy in learning process. Enjoy your learning process. Enjoy your ignorance. Enjoy your knowledge. Okay. This is a little what I can share in the given time. Again, it is always a pleasure to meet the upcoming chartered accountants because they are the future. They are the ones who are going to come into the profession. All the very best. And in case of any doubts, just reach out. Thank you. I hand over the charge to Mr. Bharadwaj.
Thank you, sir. It's been an honor to be part of this wonderful webinar today. On behalf of Guntur branch of SIRC of ICAI, I would like to extend my heartfelt gratitude to our esteemed speaker, Shri Shivaprasad sir. Thank you, sir. Thank you for allotting us your valuable time and hope our participants will utilize all the Excel formulas explained by you thoroughly today and even verify the LFAR with high due diligence because of your explanation. After participating today's seminar, I got a clarity regarding the ocean of knowledge you got on Excel, sir. Hence, I am requesting you on behalf of Guntur branch of SIRC of ICAI to please grant us a session or what we say a hands-on workshop on Excel in coming days. And my sincere thanks to the Guntur branch staff who handled the event throughout. A wide round of applause and thanks to all the participants who made the event a memorable one and successful. Thank you one and all. Let's hope we all will meet again soon. Thank you, sir. Once again, thank you, Shivaprasad sir.
Thank you. Right. All the very best.
Thank you, sir.